Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Thursday the 27th of the 5th, 2021. Time is 0415 GMT, Asian session well on, European session about to fire up, and our lunchtime North American session. Right, Wednesday the 26th, yesterday we had a positive unopposed driver in the dollar at plus 128, no backdoor flows, the opposing negative flows mainly coming out the euro at minus 97, out the pound at minus 24, and the yen was the negative rock at minus 7, activity plus or minus 128. Over the week then we've had a negative driver in the pound, opposed at minus 114, front and back door flows mainly going into the euro at plus 69, into the dollar at plus 50, and the yen is the negative rock at minus 5, activity plus or minus 199, so 119. And intraday then, this is the Asian session to about 15 minutes ago, we've got a positive opposed driver in the yen at plus 53, front and back door flows mainly coming out the pound at minus 47, out the euro at minus 7, and the dollar is the positive rock at plus 1, activity plus or minus 54. Well, what's been knocking this about? Well, Thursday today then we've got German T2 consumer confidence, we've got 3 times speeches, we've got the euro speech, the GBP speech and the German speech, we've got US durable goods, capital goods and GDP today. Basically, the other issues of note, we've got the AUD, we've got potential lockdown again in Australia as a spike in COVID cases, and the Royal Bank of Scotland, not Royal Bank of Scotland, close, Reserve Bank of New Zealand even. We've got basically all the analysts are sort of putting out their policy tightening from 2022. Well, that may be so, but we'll see anyway. Right, so let's have a look at the flows. Right, so our trades have really come off due to scaling. We're now pretty much break even from 6,500 points profit. So in the weekend review we suggested 3,500 might come off, and actually it's twice that, and we've actually reduced our position in the AUD NZD down to the minimum because it looks like the market is dumb enough to push it lower, so we'll see. But anyway, we'll go from there. Right, so what have we got? We've got euro. Euro's weak except against the pound, the CAD and the AUD. The yen is strong except against the NZD and the Swiss. The pound is weak across the board. The Swiss is strong except against the NZD. The CAD is weak except against the pound and the AUD. The AUD is weak across the board. The NZD is strong across the board, and the dollar is strong except against the yen, the Swiss and the NZD. Right, so what have we got? We've got New Zealand strength across the board, pound weakness across the board, exact opposite of what our positions are, so there you go. Right, what's going to well, we'll have a look at the asset classes next, which is start with the dollar index. Start with the dollar index. So right, away we go then. US dollar index. What have we got? We've got this sort of situation. It's basically at around the break support, which is 90.06 for the US dollar index. Gold gold had this sort of look to it. It's come up. It's about 0.25 from the high. So it's not really moving, but it's relatively stable on the up. Oil has is 0.23 from the high. Nobody's really playing in gold or oil basically. The Wall Street broke and it's come back to roughly the resistance point of the break. It's 0.23 from the high. S&P double top break. It's come back to 0.17 from the high, and the tech is 0.23 from the high. So the tech's actually sort of caught up in that respect. US 10-year and the bond. US 10-year looks a bit like that. It's 0.33 from the high. So we've had a bounce in price. Yields have come off, and the bond actually broke, and it's now come up to 0.45 from the floor. So the European price has come up significantly. Yields have dropped. So that's where we are, and this obviously has a bearing on the euro dollar. So let's go from there. So basically, the price of European bonds has bounced relatively more than the price of US. So the yields have dropped off in the bond relatively more in the short run. So that should put downward pressure on the euro dollar, possibly. Right, copper. Copper's sort of basically got it's 0.45 from the high, still pretty soft, and US steel had sold off at the double top. It's come back. It's about 0.42 from the high. So commodities are being ignored. It's everybody's all over buying the New Zealand dollar and selling the pound at the moment, which is the exact opposite of what we are positioning. We've basically, well, just get rid of this. We've basically received, so we're short USD dollar against the euro, the pound, and the AUD, and we're short NZD against the euro, the pound, the CAD, and the AUD. We've basically received both barrels. We've had a New Zealand dollar has basically gone the wrong way. The pound, we're long the pound, and that's basically gone down. So end result, we're grubbing around at break even, although we have scaled, and we've reduced our AUD NZD trade, so longs down to the minimum, because it looks like they're going to push the AUD down further against the NZD. So that would be our take. We believe this will be all very temporary. You're going to get the analysts have been touting reasons like month-end flows, etc. We'll see. It doesn't really matter what makes it go bent. It's just it's bent. You've got to manage it. So anyway, there you go. Watch out for further weakness in the AUD against the NZD as we go into the capital goods orders. Anyway, hope that was useful. See you again tomorrow for the briefing. Thank you.